Hi traders, back again, and this would be the range bar trading 123s and how I would go about it. And so what we're looking at here is the Euro New Zealand pair, and this is represents the last day of the week, which happens to, in this case, be April 29th, 2016. So starting with just the bar themselves, as if you remember from the last video, each bar represents 13 pips. Okay, so if you look over here on the data window and you go look at the high-low, you can see that the high in this case is 90. The last zero is the tenths of a pip. The low here is 77, and if you watch over here, then each time I go over a new bar, you'll see that the bar is exactly 13 pips. Okay, and once again, that just removes the noise so that, like maybe in here where you have this bar right here, it may have been 30 minutes that went by, whereas going from here to here to here, that could have happened in the same, like in 5 minutes or so. And so that way we don't have to sit here and watch all this crap. We're just looking at what's pertinent and what we're looking to trade. A couple other things I use on here. This white line is a 50 simple moving average, and that's used to give us a basic direction. Some traders use this exclusively if price is above the 50, they only trade long. If it's below the 50, they only trade short. But one of the more significant things about this is virtually, a large majority of the traders around the world, do use the 50 on their chart for one reason or another. And the other one up here, this aqua color, is, in this case, it's a 7 smoothed moving average. And so it's a 7 moving average, and it's the smoothed method. You have, of course, your 4 choices there. And the reason I use this is because I've noticed that, basically, in many times, maybe not so much on this chart, but actually really yes. Okay. If you get a new close above or below this blue line, it will tend to continue in that direction. Okay, now over here we're getting to the end of the day. This is after about noontime in New York. So anything in these black areas, particularly like after this bluer blue box, is going to not be an area you're interested in trading in anyways. And so that's what this is. So this is the 7 moving average. Now you can use a 7 smooth moving average. You can use a 10 EMA, or anything that generally gives you something similar to this. A lot of traders just use a 10 EMA or a 10 simple. It doesn't really matter that much because we're not depending upon where this line is to execute trades. Just a basic guideline, a reference point, whatever. Now, these boxes on here, they represent time period or time frames exclusive to major markets. Okay, starting with the green one on the left, this is approximately actually this is not quite right here, 1837. Well, it is close enough. This is the Asia Open, which is, let's see, New York time, that would be 8 p.m. currently. When we're not on daylight savings time, that would be 7 p.m. New York, or 4 p.m. On the west coast of the United States. And so, anyways, then the next box here, the flatter colored blue. This is the London session. This is all the price action that happens for the first roughly, what is it, 3 or 4 hours of the London session. Then there's a bit of a break in here. I would call this the London lunch time. And then there's the New York Open right over here. And this is typically where you want to be trading, because a vast majority of the price action will happen from the London Open to about noon New York, which is also right around the London close. Okay, so let's trade this. Okay, and this we're going to start. Let's just take it right to the start of New York. Okay, so now let's say you just you're in the U.S. and you just woke up and you're looking at the chart and it's down here someplace. Okay, so you probably missed this, because this is like well, this is 6 a.m. New York, 3 a.m. in like Los Angeles. Of course, if you're a European trader, then you're up for all this stuff over here. But anyways, let's just make this simple. Let's say you got up and price is right here. So now you're looking at price running up 13, 26, 39. Well, actually, that's not quite right, because the range bar candles, they can overlap. Okay, they're all 13 pips, but they can overlap, and in this case, they do. Right here, they overlap a little bit. They overlap here a little bit, and overlap here a little bit. But you have 5 in a row before you have a red candle. Okay, so now, as I mentioned in the previous video, when you have this many going up like this, you don't want to just jump into the first 1, 2, 3, because this down here would be a 1, this up here could be a 2, and then this would be your 3 right here. So, you know, in that case, you're waiting for a break of 2 up here, and you know, you might have got a couple of pips out of this, or you might have got it stuffed. So, and number 2, you're above the 50, so you are looking for a long. Like I said, you just made a run up of, let's see, about almost 60 pips. So you know you're going to have a little bit of goofing around. And here, just for however long this takes, price did nothing. So you don't want to, I wouldn't get in there anyways. You may have a different way to trade this, and that's fine. So, so now we're looking at maybe using this as the 1, and this is a 2, and this is a 3 down here. And if we did that, we're still in the same kind of situation, and we might have got this one stuffed. It goes up, well, it actually goes up 16 pips. So you might have been able to get something out of that. I mean, typically, you're trading this anyways. You might want to, if you're looking for, say, 15 pips, of course, you have the spread to consider. And so you might want to, once you get, say, 9 pips or so, 8 pips, you maybe move your stop to break even. In that case, that's not a bad way to trade. You would have got a break-even trade trading this one. So now you're looking for your next 1, 2, 3. You're still above the 50, so you basically want to go long. Price retraces clear down to here and gives you a new 1. Okay, now it goes up here. This is pretty stiff run, but generally the bias for the day is up. So and this, let's see, this run up from here as high is about 42 pips, which on this pair isn't a great deal that you're in New Zealand. You know, if this was like many other pairs, that might have been considered too long of a run. Anyways, so we have a new low here of a 1. If you want to use this as a 1, this could be a 2, and then this would be your 3. And then your entry would be just above this 2 right here, and it goes up about 13. So maybe, let's see, if your stop was down here, about 15 pips, then you're safe because the price only retraced about 8 pips. Add the spread in there, maybe 12. And then goes up significantly. So this could have been a winning trade. So that's the basic idea. And this is kind of a choppy market. So what you have to do is have to start training yourself to look for this stuff. And there are some cheaters. 1, 2, 3 pattern. Okay, so here's a just a regular indicator. This is not an expert advisor, and I'm just making these colors so we can see them. And what this does is it draws a 1, 2, 3 on the most current bars. So you might want to use something like this. And when you add this to the chart, make sure you use colors that you'll be able to see in your chart. Throw it on here, and it shows you the last 1, 2, 3. Let me expand this a little bit because it's kind of busy in here. And it uses a Fibonacci. Okay, and you can set this one, the Fibonacci, it gives you a target of 161. You can set this up to whatever target you want, but it shows you here's a low 1, and this one does not consider any of the 50 MA or the 7 or anything like that. It's just what's the most recent one. So this gives you a 1, a 2, and a 3, and then so in this case you'd be taking a long at this high right here, and that's how this works. So I mean, this is available if you want it. I can give this to you to help you find it. So this is the basics of how this trade. Let me okay. Oh, I need to get rid of this indicator. I don't really want it on here. Delete. Close. Okay. Okay. Let's just look at a couple more trades. Let's see. The last one we looked at was here, using this 1, 2, 1, 2, 3. Moved up here, did well, and actually gave us another 1, 2, 3. So we could have traded this one here also. Let me mark these so that they're a little bit easier to see. Okay. So, all right, so we could say this was a new one. Remember, we had this one down here as a 1. Now we could also say, well, you didn't like it because the price went up too fast, too far, so maybe skip that one, and then use this as a 1, 2, 3. And roughly the same thing happens. This was good. So here's the 1. Here would be the 2. Here, let me leave these on here so they're easier to see. Let's see if I get this right. 2. Good. Okay. This would be the 2 then. And then this would be your new 3. Okay, right there. Now, it's not much of a 3. It doesn't really stick out like a lot of these do, but you could count this as a 3. Now, in this case, had you traded this one, you might have got stuffed because, well, maybe not. Let me see. This one, the high of this candle is 86. The high of this candle is 88. Okay, so typically you don't get in right at any movement at all above this candle. You would have anywhere from a 1 to a 3 pip range that you would use, or 1 to 3 pips. So this high right here is 86. your rule might be getting in if price breaks 87, 88, or 89. With a faster moving pair like the Euro New Zealand, you just might use 3 pips. You might use 2. Once again, choose your own. And if you're using a 15 pip stop and got in right about here, this one would have stopped out because it dropped down 21 pips. However, then it makes a brand new 1, 2, 3. Now we're looking at, let's see, oh, this would be the 1. This would be your new 2. Sorry. This is the 1. Yeah, this is the 2. And this then is the 3. But now this is no longer a 1, 2, 3 because your 3 is lower than your 1. So that means start over. So now then this is your 1, and this is your 2. And in this case, no trade because the 2 doesn't get broken. And quite often, this is the 2. And quite often the 2 will not get broken, and that's fine because that keeps you out of a trade. Then there's just no trade. And so that's roughly how this works. So trading this one on Friday actually would have been pretty good if you were familiar with trading this method. I don't want to get into each one now, but now we're still above the 50. So any of these, now we have 1, 2, 3s coming down. This would be a 1, this would be a 2, and this would be a 3 because now we're changing directions. And you could have actually probably traded this one and made some pips on it, but it's above the 50, and I tend to stay away from sell trades when we're above the 50 and stay away from short trades when we're below the 50. Okay, so then we're waiting for a new 1, 2, 3s long, and I don't see them. This is a 1. This could be a 1. This is a 2, but there's no break of the 2. So here's a new 1, and this is a 2. Let me see. This high is 92. This high is 93. Probably not enough. 1 pip above here is all that it went, and that's just not quite enough to make it look like a 2 to me. So anyways, then we're just looking for a long. So this could definitely be a 1 right here. This would be your 2. But there's no, then we have down here, this is the next low, which breaks your 1 again, so it's no longer a 1, 2, 3 because we have a lower low now. All right, that's fine. So now we move on. This is our new low, a 1. This would be the 2. And let me move this out of the way right here. This is the 2. This is the 2. And this is our 1. Let me just make this a little bit easier to see. 1, 2, and then this could be the 3 right here. And in this case, we're looking for a break right here of the 2, and this goes a couple pips above there. It looks like plenty. The high here is 86. The high here is 89. Gives us an entry. We're going to have a stop somewhere, somewhere down about, this would have actually maybe been another stop out. Anyways, also you may not have wanted to trade this. Myself, I probably wouldn't have traded this, and it's because we've got too much jumbled up stuff here. When you have consolidation like this, any type of consolidation, you want to kind of wait until things kind of clear out. So maybe waiting for a break above a certain level, and we do get a break above here, and let me just try and speed this up. This is getting a little bit lengthy now. So we might count this as a okay, wait a minute. There we go. As a 1, 2, 3, the new 1, 2, 3, since we're pretty much still in a range here, and price has got too many wicks going either way. You know, you have to just kind of learn what to look for and what to see in all this stuff as far as what you want to trade. Of course, now we're also getting near the end of the day, so maybe you don't want to trade in there. Maybe it's just too messed up. There'll be some cleaner looking charts that you can look at. So this, this was probably confusing to many of you how it looks in here, but if it looks confusing, you remain in your cash position, okay? What you want is something clean and clear, which in fact, let me just back up here quickly and I can show you what you really want to look for instead of looking for jumbled up areas like this. Okay, so let's see here. Moving over to the London session. Okay, here's the London Open. So generally, is the price action is a mixed master in here. You get all chopped up. So we have the start of the open of the London session. Usually the first period of time, whatever you choose, you might want to stay out. It does go up, and price has been going up nicely. Here's our most recent 1, 2, 3, which starts sometime during the Frankfurt Open, and it makes a 1 and a 2 and then a 3, but the 2 never gets broken. Then we have this consolidation stuff, and price heads down. So we only want to take longs, and we don't have any setups that work here as far as 1, 2, 3. So we're dropping down. We can call this a new 1 and then this a 2, but then nothing happens. We get into more consolidation, and then it does move up here a little bit, and you might have wanted to call this or this a 1. Price does come up here, but it only breaks this high, this 2, by 1 pip. Not enough probably to get you excited about going in there. And now we have a close below the 50. Okay, so the way that I would then look at this is now we have a close below the 50. So I'm going to start looking for shorts. But no shorts here. Okay, because it just goes down, 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 and down. And then it just goes up, 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 and up. So if I'm looking for shorts here, then I might count this as a 1 and this is a 2, but the 2 never gets broken, so now it goes back above here. And so this is actually a price action day on this pair that didn't really offer much. Let's see if we can find one that looks a little bit better. Okay, this was one. In fact, I had a couple of trades in on this one. This was a New York session on Thursday, the 28th of April. And in this one right here, it was a lot simpler price action to figure out. First, we have the up down stuff at the beginning of the New York session, where price comes down here. You're looking for 1, 2, 3s, new ones to show up below here, and here we have a 1. Excuse me. Here we have a 1, a 2, but the 3 doesn't. 1, 2, 3 breaks the 1, so this is not a 1, 2, 3. Here's okay, so we start a new 1 right here. Here's a 2, that doesn't get broken, nothing happens. Now we have a close above here, and we have a 1, 2, 3. This may have been a bad entry here. I don't know. Let me see what the difference is. High 29, high of 32. This could have been a loss. And then now we have a new close below here, and so now we're going in this direction. And if we're counting this as a 1 up here, then we have a 2 right here, and then this would be a 3. Entry would be right here, and just jams down, giving us a new 2, if you will, with this being the 1, 2, 3, and this could have been another nice trade short. Now, a lot of times after 2 trades that work really good going down, you might want to really scrutinize your next trade, or maybe 3. Sometimes you get 3 out of it. And in this case, if we show this as a new 1, a new 2, and then a new 3, we don't get a break of the 2 here and here. And so in this case, let's see, 11, 13, 4 candles go by before we do get a break. That may just be too much choppy action. So whether you get in this one or not would be totally discretionary. Anyways, I hope this overall gives you a good idea of what's going on the charts with this 1, 2, 3 type setup, and what you want to look for and what you don't want to look for. Once again, you want clean price action. You can also use something like this, which will give you a basic currency strength, with, of course, the 8 being the high, or the strongest pair, and then the lowest one will be in the bottom. So a lot of times this will give you a general idea of what pairs you want to be trading. If you open up the charts in the morning and say these 3 pairs are staying in the top, then you're going to want to look for maybe one of the other pairs down here at the bottom to trade counter on this. And you're going to always find, every day you're going to find one pair or another, or maybe 2 or maybe 3 that are going to give you good clean price action, like this actually is, as compared to this type of chop, up, down, up, down, up, down, up, down, and more chop. Okay, so you just want to look for the smooth runners. This is, of course, the Asia session. You don't want to get involved in that. And this is before the Asia session, which is middle of the afternoon, New York time. And this is after about between, say, midnight and 2 a.m. New York. And that's generally not very good. It could have been pretty good here, but a lot of times you just don't want to be trading then. And then you have getting back into, this is as far as this chart goes back into London and New York the previous day, and this is just a chop fest So you stay out of that. And then let's see if I can find another good clean setup. Okay, so here is the pound yen. And this is something else. I haven't talked about this at all yet. That's also available, but I don't want to get into that now. And you just start looking for your 1, 2, 3s, 1, 2, 3s. And you're going to have to look a lot because you need to train your eyes to see these things. Otherwise, it just looks like a mess. But if it does look like a mess, move on. Find something clearer to see. All right, well, I think I've done enough confusing of the issue here. But anyways, feel free to contact me to ask any questions. This is Daryl.